Snipers, you have to see what's happening to the Bitcoin price this Friday as we're heading into the weekend where the cryptocurrency market is the most manipulated due to the futures markets being closed. And notice how Bitcoin right now is below the 200-day moving average, sitting at 45,600, with today's daily candle low at 44,738, just shy of this $44,800 level. We did not see price action below this level, but this is the area that we're expecting to see more volume come into the downside if we come back down to test this level. Notice how this 4-hour candle only has a wick so far, but this door opening, since we already have a wick down towards the $41,950 level, could potentially bring the volume to the point where we could see downside back inside of the range from 41,950 down to 38,000, with a potential area of interest here at 36,500, where we have confluence with this market structural support, which was previous resistance when Bitcoin first came down below 30,000 US dollars in the latter part of May. And so understanding the fact that we've already cleared the order books between 44,800 and 41,950 gives me the opinion that we are currently in a very sensitive area, and the longer that we stay below the $46,000 level where we have the 200-day moving average, the more Bitcoin is in a position of weakness. And if we start to see volume come in, which we just saw a little bit of sell pressure come in to test 44,800, just a slight bit more volume could really start to bring Bitcoin's price down below the $41,950 level. So understand that if we can get above 46,000 where we have the 200-day moving average, then we can potentially start talking about a scenario of coming towards 47,000 where we have the monthly open. And this is really where we need to start seeing price action for the bulls if we want to assume that we're going to see upside from this move. If you guys have been paying attention, I've been talking about altcoins, with Bitcoin giving us the first view of how we're going to start seeing the altcoin market perform over the next few months into the next year or so. With this downside price action, it was the first way that we were able to start testing our prediction here. And Ethereum leads the other altcoins since it is the largest altcoin. And notice how we're seeing weakness with Ethereum back at the monthly open at 72,800 Satoshis. And this is a big concern, because if we start to see this price action come back down towards 65,000 Satoshis, then this move that we saw to the upside has no significance other than the fact that it was a retest of previous resistance for us to form a lower high, which the initial high was just shy of 86,000 Satoshis, which this is right here, the level we want to get above if we want to assume a flip for Ethereum, if we want to assume Ethereum is going to outperform Bitcoin in the next few months into the next year. But since we're so far away from 86,000 Satoshis and we only have a lower high so far, we could assume that our opinion about Bitcoin dominance increasing and altcoins starting to slow down if Bitcoin continues to see downside is valid. And so this is a huge puzzle piece to see Ethereum down right now. And then, of course, we're going to take a look at traditional markets to see the other revolving parts and how they're reacting. The DXY isn't doing too bad. We're not seeing traditional markets really react to the strength of the dollar just yet, with the S&P 500 still sitting way and above this 20-week moving average. And this is allowing Japan, for example, to see some upside, potentially going to break new all-time highs here. And the Euro 100 has been quite stable as well. And China looks like it wants to follow Japan here soon. So this tells me that we're really buying time right now with traditional markets not seeing an effect against the DXY. It's giving the cryptocurrency market some room here, but we really need to consider the fact at this point that 64,000 was a high and a local top. And so far, we only have a lower high forming with this move that we saw since the B-Word event, the 80% upside after Elon Musk, Cathie Woods, and Jack Dorsey spoke. And we kind of got a more clear picture of, Elon Musk's opinion on Bitcoin and so forth. It gave the room for this relief rally so far. And at this point, because we are above all daily moving averages, what we need to realize here is that this area is the most important place for Bitcoin right now, because we have the 200-day moving average here. And so when we go into the weekly chart, you'll see here there's also confluence with this $41,950 level with the 20-week moving average. 20-week moving average being more significant since we've already come down to test 41,950 and we're staying below the 200-day at 46,000. This next move would be the move that would potentially put us below the 20-week moving average. Unless we get back above 47,000 when the monthly open is sitting, we have to start looking at the downside scenarios. And so the significance of us breaking 41,950 is not only that we're going to potentially come down to the $38,000 to $36,000 level for the short term. We could even potentially go lower later in this quarter, maybe into the end of the year. But the other part of 41,950 is that it puts us back below the 20-week moving average. And when you're looking at any trend in the macro, when you're above the 20-week moving average, you're bullish. When you're below it, you're bearish. And so understand that with the S&P 500 above the 20-week moving average, Bitcoin is fine above the 20-week moving average. But when we see the traditional markets react to the DXY, if it's going to react, if the DXY is truly starting to move up, then that's going to be the final draw, I believe, for the cryptocurrency market, at least in the short term. And so I mentioned this earlier, for us to assume that we're currently in a bear market is probably not a bad idea, just keeping in mind that we have a local top at 64,000. So far, we've only formed a lower high. That means the end is closer than the start. And so if we come back up, then that means that there's going to have to be a bear market later down the road, which means that 2022, 2023 might not be as exciting. But if this is truly closer to the end than the start, then that means heading into next year and the year after, we could really start to see that $100,000 Bitcoin come into the equation. And so this is a very critical point, obviously, as I've kind of drilled, where we're sitting in this area, in this zone below the 100-day, the 200-day moving average at 46,000 and above 41,950, which is the 20-week moving average. If we start to see 44,800 break, that's where I'm going to expect volume to be able to just kind of slice through this range, since we already have this wick, and that puts this bearish scenario on the books. So 47,000, we'll continue to monitor. If we can get back above this level, everything more from the smaller time frames into the larger time frames. On the hourly, we have yet to get even one hourly candle fully above this monthly open. So that's food for thought. There have been many hourly candles, it seems like, now below the 200-day moving average, which is why we were saying that there was some weakness here. So notice how with the volume as well, with this retest, when you come to an important level like 44,800, you could really do to get hints of the next move is look at how volume reacted to the important level. On the 15-minute chart, we came down, we had this wick, and look at this sell pressure. The buy pressure that came in was nowhere near as strong as the sell pressure. And so it looks like we're seeing these large spikes of sell pressure, which is institutional volume, and we're seeing indecision. Notice how there's all these red, green, these back-to-back buy and sell volume on the 15-minute chart, indicating indecision with retail traders. And so, the melting pot of large institutional sell pressure and indecision with retail traders is really a tough area to be in if you want to be a bull. And so, so far, if we come into even like the 3-minute chart, notice how we did see this large spike of buy pressure, but then when we came down, this is the important part, to test the important level here, we didn't see much buyers. And so, I'm just being the umpire here, and I'm saying that if we can't get back above 46,000, we were really giving Bitcoin some room with 47,000, and we failed to get there. Now we're below 46,000. It's really a ticking time bomb below 46,000 for Bitcoin. We have to get above that if we want to assume some bullish price action. And remember, I said if Bitcoin is not going to hold that 200-day moving average, Ethereum is also in a very critical position, because Ethereum has this huge range from 3,454 down to 1980. And because Bitcoin failed to hold 46,000, we're now below the monthly open and this major resistance level, which it was a support for a short amount of time, but it is now a resistance. When you break a support, it becomes resistance. We're below the level. It's now a resistance. This is a huge roadblock. If we can't get above 34.54, it is not looking good for Ethereum in the short term, because 1980 would be the next target. Of course, that might not happen immediately. We might come down, test the previous monthly open where it was right around that $2,500 level. But the important thing to realize here is if Bitcoin can't get above the $46,000 level where the 200-day moving average is sitting, it's going to be tough for Ethereum to get above this monthly open at 34.54. And of course, if Bitcoin can get above 47,000, where it also has its monthly open, which isn't a coincidence, then that gives the chance for Ethereum to get back above 34.54. But what we really want to monitor right now is we're seeing this downside, as I said earlier in this video, and as the thesis of our channel has been, is the altcoin performance against Bitcoin. Ethereum not doing too well back at the monthly open. The total cryptocurrency market cap chart is also sitting at the monthly open. And one thing we have to realize is we also just have a lower high so far here with this extremely bearish candle. It looks like a top candle that happened when we saw that 19% push down for Bitcoin a couple days ago. So that has formed the lower high so far. And Bitcoin dominance is what we're going to certainly be monitoring, just like we monitored the DXY earlier in this year before we saw it first cross above the 20-week moving average, and that allowed us to predict the top for Bitcoin in May. With Bitcoin dominance yet to form any further lows, as close as it is right now to the low in May, it is still yet to make any further lows. And remember, the DXY double bottomed when it started its reversal, at least so far, which we can assume this is a reversal because we're still above the 20-week moving average, and it double bottomed. So isn't that some food for thought there, that the Bitcoin dominance could even go back down to the May bottom and double bottom just like the DXY before seeing the push above 46% dominance, which is the 20-week moving average, which is where we have to start ringing sirens, because realize that we've been below the 20-week moving average since the start of this year when altcoin season started. And before that, we weren't seeing a tremendous altcoin season. For DeFi, there was a portion of 2020 that DeFi did really well, but for the most part, we didn't see some crazy altcoin gains when Bitcoin was the only one moving up until we got below the 20-week moving average. So getting back above it is significant. It starts assuming market sentiment shifting in a macro sense, right? This is a 20-week moving average, not a 20-day or 20-hour moving average. And Ethereum dominance, very interesting because it's certainly different than the altcoin dominance chart with an ascending triangle and above the 20-week moving average. Others dominance also above the 20-week moving average, but it's not like an ascending triangle. You notice here we came down almost like a descending triangle, and so far we've only formed a lower high. It looks like it's either going to lower high or higher high before seeing some downside here. There's a lot of buy pressure, but that means that eventually sell pressure will come. And so, the same way the Bitcoin dominance chart sort of double bottoming, it looks like we're going to see a double top here, and I'm going to stick to that opinion. I don't know if this is just going to rally up. I mean, if we see true significant volume and a real breakout above the previous highs of the altcoins outside of Bitcoin and Ethereum, then we can assume an extended altcoin season. But until that happens, the umpire in me says that it's a lower high or a higher high. But we want to monitor Ethereum dominance. If we start to see Bitcoin dominance cross above the 20-week moving average, if Ethereum dominance comes below the 20-week moving average, then there's certainly going to be a flow of capital only into Bitcoin from altcoins. But if Ethereum dominance can stay above the 20-week moving average, the others' dominance might get below the 20-week moving average, and Bitcoin comes above the 20-week moving average for dominance. That could signal for the first time that not only is Bitcoin going to act as a hedge, but also Ethereum, which is going to bring in more capital from other altcoins. But that is a very far out opinion to say that Ethereum is also going to be a great hedge in a latter part of a bear market, which once again I say take that lightly, since Bitcoin is yet to form any further highs. If we say that we're almost towards the end of this bear market, if Bitcoin can't form any further highs, then that's a positive thing, because that means sooner or later we're going to see some upside. And you guys know my downside worst case scenario for Bitcoin. I do not expect it to ever come back below 20,000. If we see the worst case scenario, it's that 25,000, $34,000 level, but I do believe 36,500 will be some short-term support. So I don't think this is going to just slice down like we sliced down from the $60,000 to $30,000 range. I think that what we'll see here is a bounce. This is if this downside tenor plays out. I think the bounce at 36.5, maybe 34,788, that would show a little more weakness. Would be where we kind of stand in the next few months and then come back to 47,000 at some point before seeing the final push where institutions start to accumulate. And I don't think that would ever come below 20,000 for damn sure. If you look at previous cycles, Bitcoin never comes down, to test a high that it broke. And we maintained that opinion when we first dropped, and that ended up, staying true. We didn't yet to come back down to that level. So that was a good opinion to hold, and it also held true for Ethereum not coming down to 1440 to test its previous all-time high. So that's why we were able to grab those entries at 1760. Question is, now that we finally saw the push up that we were expecting, that lower high for altcoins, and that includes Ethereum, is this the short-term end of altcoins outperforming? And that's what we're going to find out here in the next few weeks on the Snipers channel. And with the DXY, we're not seeing crazy price action to the upside, and that's good. Like I said 2 days ago, if we see the DXY push above 93.82, that would be my concern, because I think that traditional markets are not going to be able to hold up if that happens, because now we're sort of in this transitionary phase where the DXY really wants to move up, and what I would expect is for the 20-week moving average to come away from the equation and for us to come towards the 200-week moving average. And that, I think, could certainly start the effect of the DXY to the traditional markets, which we know, based on what happened in March, will affect the cryptocurrency market. So, we're not sitting here with a bearish opinion, but what I am saying is the same way we monitored the DXY when it first started to drop in 2020, and the first time we came above this 20-week moving average is how we're monitoring Bitcoin dominance right now, because this already happened for the DXY. DXY is very correlated with Bitcoin dominance, as we saw in 2018. And so are we going to just see another double bottom? I think that that's a very possible scenario for Bitcoin dominance because of what happened to the DXY. I just don't expect that correlation to decouple for any reason at this point. And so with gold, you can see we're still outside of this channel resistance, which is now support, which means that it's stronger than it was when it was below this area. And it was below this area for pretty much the full part of 2021 and halfway through 2020. Gold was weak, but now it's starting to strengthen. When you start to see commodities like gold strengthen, it's assuming that institutions are now a little bit more risk off, and they're going into safer hedges outside of traditional markets, and stocks that might have high PE ratios. And of course, the cryptocurrency market could also be considered risk on, not risk off. And so, with gold being more strong than it is weak, that's a puzzle piece, but it hasn't yet seen anything crazy. I think that would also be something that would be caused by the DXY moving up. And so the traditional market's buying time for the cryptocurrency market right now. I think that's what's allowing Bitcoin to stay at the 200-day moving average. And if we start to see any movements in these other revolving parts, that's when we'll start to have to ring the sirens and see what's really starting to happen, where institutions are hedging their money. And like we always do on the Snipers channel, we follow the money. And with that, thank you all for tuning into the channel today. I hope you enjoyed today's analysis. It's going to be interesting to see how Bitcoin reacts here. Below 46,000, that's weaker than we were expecting. So that's not what we wanted to see for the bulls. Let's see if 46,000 can reclaim itself, or we see that push down below the 20-week moving average. And until next time, Snipers